Well, greetings to all my investment clients. My name is Walter Mazars, your wealth manager, CPA tax advisor. As always, important disclosure. Please read this disclosure in full. First of all, this information presented in this video is for educational and informational purposes only. Nothing in this video constitutes investment advice, tax advice, legal advice, or recommendation to buy or sell or hold any securities or investment product. All content is intended to provide general financial education to viewers. So I would encourage my clients, but anybody else other than my clients watching this, just please read the full disclosure. Again, bottom line is this is intended for informational purposes only. So I'm recording this on Sunday, March 15th, 2026, and we will be doing stock market recap, our weekly market recap, economic, geopolitical, and markets, as I mentioned, as of March 15th, 2026. So, as everybody's aware, U.S.-Israel strikes on Iran, Straits of Hormuz crisis. So here's kind of a timeline. February 28th, U.S.-Israel launched joint strikes on Iran. March 2nd, Straits of Hormuz effectively closed, 20% of global oil disrupted. March 9th, Trump war is very complete, pretty much. Oil briefly plunges, then rebounds. March 13th, EIA calls the largest oil supply disruption in history. March 15th, the U.S. strikes Iran targets. Hormuz blockade continues. Navy escort plan pending. So lots of uncertainty, lots of volatility. Again, Straits of Hormuz, 20% of global oil transits this 21-mile choke point daily. Airspace closures, those regions pretty much they're closed down. Energy facilities hit. Saudi Arabia's refinery, Qatar export terminal struck by drones. 200 tankers stranded. Ships anchored in Hormuz, and Trans-Iraq suspended oil terminal operations. So, again, as you can see, lots and lots of uncertainty. Energy market in shock. Crude oil is, as of this recording, is around, call it $99. So 40% increase since February 28th. Brent crude also 103. U.S. gas prices jumped about 20%, and oil VIX rose 100%. So what does that say? Just tons and tons of uncertainty. Why this matters to you? Gas prices, unfortunately, are going up. Groceries, goods, diesel fuels, delivery trucks, food prices rising within weeks. Airfare, jet fuel costs soaring, inflation risk, and Fed dilemma. Oil shock complicates rate cut path. Mortgages rose to 6.3%. Market fell for a third straight week. Geopolitical risk, surging energy costs, weighed in on sentiment. So, high-level recap: S&P 500 for the week was down 1.6%. Dow Jones almost 2%. NASDAQ, which is technology, about 1.26%. Russell, again, which is the largest 2,000 companies on the stock market for the week, down 2%. VIX rose to 27.19, increased, and 10-year yield rose to 4.11%. So, again, markets are trending in the wrong direction. Sectors performance in 2026, year-to-date, best performance, obviously, energy, utilities, materials, consumer staples, industrials, and probably technology and financials are the worst performing sectors. Yeah, why we moved out of the equities on February 23rd, 2023. The technical signals, February 23rd, S&P 500 broke key support levels. Technical traders flagged distribution patterns across major indexes. Momentum indicators were heading in the wrong direction. Volume, everything was pointing to a potential tons of uncertainty and a redirection pretty much to the downside. So what we did, current positions, I want to stress to my clients, we are out of the market since 2023 and went pretty much into an ETF BIL, which is a 1 to 3 month U.S. Treasury, very safe, pretty much no risk to your money. So we're kind of sitting on the sidelines. Kind of a great comparison analogy, and the founder of Technical Traders uses this analogy, kind of comparing a storm approaching on the Great Lakes. Pretty much if a captain or if you're out on a boat in Great Lakes and you see a storm brewing, what are you going to do? You're going to go to the side, to land, to your dock, and anchor down your boat just to make sure it's safe from the storm, and then watch from the shore as the storm unravels. And once it settles, you go back out to the lake. Similar with the stock market. We saw the same warning signs building in mid-February. So bearish technicals were amassing, market breadth deteriorating, valuation at .com extremes, VIX beginning to stir, so head higher. So we moved clients to BL and watch from the sidelines safely. When we're going to get back in, we'll just have to let the storm ride out. Why we exited stock again? And I'm not going to go into the great detail or deep dive, but there's tons of uncertainty. So there was technical breakdown, market breadth collapsed, stretched valuation, meaning everything is in a bubble territory, overpriced. So there's tons of uncertainty. That's the point I'm trying to make. I don't want to really go into deep, these technical fundamentals, macro warning signals, but the point I'm trying to make, there's a storm out there in the stock market, and we don't want to be involved at this point. Are we going to get back in, in 2 weeks, 3 weeks? I have no clue. We'll just have to let the storm ride out, and then we would get back into an appropriate sector in the future. So U.S. economic and labor market, February payrolls were very bad. Lost 92 jobs. Job loss sharply missed 55,000. Forecast gain. Unemployment is at 4.4, so it rose. But true unemployment is much higher. If you really count people who are no longer counted in the unemployed, it's kind of a silly approach that they take. If somebody's stopped looking for employment, they just drop them out of the unemployment statistics, which doesn't make sense. Fed funds rate target 3.5 to 3.75. 10-year Treasury is at 4.11. Yields rose, of course, on inflation fears. So Federal Reserve Watch, GDP economic outlook. So there's just tons of uncertainty, and that's the point I'm trying to make to my clients. I'm not going to go through these. If you want to stop the video and kind of look at these metrics before war and now, and what is the trend going forward. And again, what I'm trying to paint is uncertainty, tons of uncertainty. What to watch week ahead, FOMC meeting March 18th through 19th. Again, everybody is kind of expecting maybe a hold, maybe a rate cut. If there's a rate cut, markets are going to probably react positive. U.S.-Iran war developments, that's key, critical. Economic data releases, and again, I'll let you read the detail if you just want to stop the video. For time's sake, I'm not going to go into great detail here. Anyway, thank you for watching this part. Don't forget to tune in. I talk on the radio. I call it Tax Investment Cafe on WNZK 690, 680 every Saturday morning, 8 o'clock to 8:30 in English and 8:30 to 9 in Polish. But before I say good night, because I'm recording this late in the evening, I do want to just touch base just real quick on the actual stock market. Well, let's first look at interest rates 1 year. As you can see, interest rates are heading higher, and that's not a good sign. This is not where we want to go into long duration bonds. Because if interest rates go up and if we're holding 20-year bonds, we're going to lose tons of money. So right now, the trend on long duration bonds is heading in the wrong direction. If we kind of look at all, what we want to see is this, not this trend. So we'll just have to wait and see if the trend reverses at some point in the next 2-3 months. And then we may consider getting into long duration bonds. And let's take a look at the market real quick. Again, remember, we are out of the market, so I'm just comparing long duration bonds, general broad market, SPY, gold, and technology. As you can see, for 1 month, the trend is down. For 3 months, again, the stock market here is down, and even gold is trending down. And if we look at 1 year, gold was trending up, and now it's trending down. Stock market, same thing. If you can see, since pretty much November, it's just been trading in a range, and it's really trending down for the last really 2-3 months. So not a good place to be in the stock market right now. So we'll just have to wait and see. So on that note, again, I want to thank you for watching the video. If you have questions or concerns, you can always call me directly on my cell, 586-873-8156. Thank you for watching. Have a great week, and we will see you next week. Take care. Bye now.